Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Markify. I'm your co-host Joel Alcana, along with Brianna Valesky, and we have Scott Red Dog Redler on the line. He's the chief strategist at T3 Live and T3 Trading Group. Scott, let's get right into the high beta tech here. Apple's had a $10 run over the last 4 or 5 sessions, going into the Tuesday print. How you sitting in Apple?
Right now, to be honest, I'm flat, and I'm a little upset about it. But at this point, I think there's going to be enough opportunity. Tomorrow, maybe after hours, before the print. A lot of people thought the same thing with Google. If you remember, before Google's print, that stock went from about 540 all the way up to about 590, and then still gave you a great trade after hours above 615, and then it also gave you a decent trade where it opened up, I think, around 685, went to 703. So at this point, if you're a trader and you took the trade off in Apple because it's come, 9 points after those overthrow lows, I'd be a little patient. I think, some people have been fading it the past few days, getting hurt. But if you look at the chart of the Qs and you look what the Qs did as it got through 111 and just crushed shorts, thinking that it has to stop at, top end of the range resistance, I would also think twice about that. So as far as Apple's concerned, it's been in a channel now for basically this entire year. Between 120-ish and 134, so that's 14 points. If they deliver, which this quarter tends to be a little bit lighter, but they're already trying to say that next quarter they're shipping well, you have a measured move to about 145, 148. So maybe take a call spread into it where you can buy the 135s and sell the 138s. Maybe take some in-the-money calls, or maybe wait for the print and try and play it after hours. It all depends on your time frame. But ultimately, stock hasn't done anything in 6 months. The PE is cheap. It's acting better technically, and definitely all eyeballs need to be on this one.
All right, Google, they had the 30-cent beat, the follow through, all good things coming out of the new CEO, Ruth Porat. What now do you do with this thing? I mean, you hit the high on Friday, you backed off. I guess we can go. I think the print or the stock you mentioned with the Google L here. What do you do now? You just, do you wait till it takes out the low from Friday, 680 and change before you get worried about it? Hard to short it. What's your outlook? You're right. Hit 703 even on Friday. Closed 699.62. Blows away the all-time high here. What do you chase it here? You try and be patient? Will it ever fill the gap down to 604.50?
Well, if there's going to be power there, obviously it doesn't fill that gap, but at least you have points of references along the way. You do have that Friday low, which was 678. So some traders and swing traders might say, I'm in this long burst 678. Doesn't break below 678. I'm going to sit in it because Google hasn't done anything in 2 years, which is probably a good way to do it. Some might say, you know what, I'm going to give this a few days to digest. And if we do have a few inside days and during the market trading it takes out 703, then you're a buyer there, for a move to, all-time highs because there's nothing to the left. I was kind of hoping it would be like Netflix today. On Friday, if you remember, Netflix opened up like $2 after its big move, and you had a trade there. It went from up 2 to down $1.50, and that was a nice little cute short, which I call it, which is against the trend after being extended. So with Google being down like $1 or $2 pre-market, I don't think there's a setup in the first 15, 30 minutes. What I would just do is have it on one corner of your eye, let it sit there. If it happens to go from red to green and looks like it's going to take out that 703, maybe you catch a day trade, for a day two. But I think the best thing for Google would be like 2-3 days, develop a flag within that, wide range bar of earnings, and then see if you get continuation over 703.
Yeah,
and since
good
I touched
point.
on Netflix.
Yep, good point. You're talking about, another thing, a good point for our traders, investors that are listening, that you're not trying to really guess the next move. What you're kind of hoping for is a little bit of consolidation, a little bit of inside action, and then let the breakout of an inside day determine your next move. And that's good. A lot of people are, it had the big move on Friday, I got to hop in today, and that might not necessarily be the best move. You were going to get into Netflix here, and I was out last week here. What was the first day that it traded split adjusted? Was that on Thursday? Or was that, what day was it? Does anybody remember?
It actually was down. The first day it traded split adjusted was I believe
Wednesday.
7:14.
Okay.
Okay.
Yep.
So I'm not sure what the day of the week. So it took 2 days off before earnings. So everyone was saying to me, like, what do I do with Netflix? With the split, I don't know how it trades. I was like, you know what? The only thing you know is 102.31. That is the all-time high. If it trades through that after hours, you know what? You could grab it if that's your risk. And it actually was lower and hovered for a good 2 minutes after the report before breaking above 102.75. So if it was short, that was your spot to cover. If you're looking to trade it long, that was your spot. But then also after earnings, it gave you a decent trade. It opened up at 111, went down a little bit below 107. So some guys made a little bit of money shorting that open. But then once it held, like three-quarters of that gap turned back up. The trade was above that 30-minute high, which was 111, and then went as high as almost 115. So without taking report risk, if you can't do it as a trader, because some guys are blowing up going short and some guys can't handle being long it, there's been intraday tactics to maneuver it. Same way on Friday, it opened up, showed a little relative weakness, went lower, pulled in $1, so it gave you a trade that way. So now, we'll see what's next with Netflix. All we know right now is 114.24 is Friday's low. If it happens to trade below that, maybe it'll probe a little bit more of that candle from earnings. But then it creates another flag, and then when we create that flag, we trade it accordingly. But at least these ranges are bigger, the moves are bigger, and some of these things are giving you, two-way action. But obviously, the better action has been to the upside, and that's been where more money's been made versus looking for these cheap shorts.
Okay, let's move on here. I know you've been pounding the table here on Facebook. It's been one of your favorite stocks here. Anything stopping it from going to triple digits here?
It doesn't have earnings this week, right? I think, what is it, on the 29th?
Mm-hmm.
So they have time to take it. Look what they're doing with Amazon. They've taken it up 7 days with 4 different upgrades ahead of earnings on Wednesday. So with Facebook earnings not till next week, you could at least just trade the action. And it was real strong on Friday. And, we had viable pivots that we spoke about at, 88 and then again at 89, and then actually even lower than that. So we've spoken about it so many times. And every time we've talked about it, we've talked about the relative strength. Down, the S&P and the Dow, and then the Dow tested the 200-day. Facebook didn't even get below the 21-day. So right there, that relative strength should have had it on every trader's radar. And then you've had these viable pivots, which you could have added to. So with that being said, I'm long a little Facebook overnight, up 70 cents. I'll probably sell a little bit, and then I'll trade around a little bit because, you could do that with the stock. Liquidity's there and whatnot, but I don't know whose rule it is, but, stock gets above 95, chances are it tries to kiss triple digits. And I guess we'll see, what happens with Apple and Amazon. If those reports are treated well, I'm sure this one will be kissing 100 plus.
All right, one stock I know we've gone back and forth on quite a bit here, and besides a false rumor last week, Twitter still back under $36, a buck and a quarter away from the low of the move here. Any hope for Twitter here?
A few days ago, I got long on 7/13, which was July 13th, when it looked as if it was going to clear that small descending channel. And then it actually was behaving well. And then that report came out. It spiked $2 and change. I tweeted to my All Access following. I'm like, guys, I'm in Twitter. I just sold some at 38.30s, on that report. I think it's been told that it's a bogus, site or et cetera. And right there, that kind of changed it again because people probably jumped in that didn't want to be in it, and shorts came in, and it kind of messed up this whole bottom pivot. So for me, I'm not in Twitter. I'm going to wait, see what happens over the course of the next few sessions. If it could hold 35-ish and rebuild, maybe there'll be another trade above 37.09. And if not, maybe when we get closer to earnings, depending on where it is, maybe there's some kind of option strategy because it's been so battered and bruised. And unfortunately, nobody's looking at their business anymore. They're not looking at their MAUs. They're not looking at the new products. What they're looking at is the whole CEO situation, whether or not they're going to get taken over. So it went from being a growth story back to a beating down takeover story, and chances are that might not happen for a while.
Okay, good advice on Twitter here. Fitbit here continues to run here. I know we've had discussions about it. Moving up here, all-time high last week over the $48 level. Apple, iWatch, Fitbit here, different animals. What's your take on Fitbit?
Fitbit's been a great trading stock since its IPO. It's still the law of supply and demand when a new issue comes public. We saw it, with G Pro until finally all the secondaries and all those things caught up with it. We saw it with Shaq, until finally, the whole squeeze happened up to 91. And, Fit is the same kind of thing. You had a good successful opening, and then it traded above the IPO high of 40, and then it keeps developing pivots to trading. Right now, you have a low of last week at 46 and a quarter, or maybe a Friday low, and if it were to take out, 48.98, it can go again. Every time it seems to take out a 3-day pivot, it gives you a trade. So I think that's what we're looking for again. And they were, I guess, first to market with the whole wearable health thing. I know a lot of guys. I actually know a lot of people that have them and have fun with groups of people using them. But I do think at some point Apple obviously is going to take their lunch. But at that point, this stock will figure out technically whether it's above or below the 80-21 day, because that's typically what you follow from new issues. You don't follow the valuation. You don't follow what people say. You follow the trend. And right now the trend is pretty strong here. But make sure when the trend breaks, you get out of the way, just like what happened with G Pro, Shaq, and some of those guys, because you don't want to stay at a party a little bit too long when the music stops.
Okay, good advice here. You mentioned Shake Shack, and I know before I left, before I went away for the week, we were looking at this thing, and it was just getting killed. And I know Dennis was mentioning the $50 level, and I was hoping maybe it would find some cover there. Now it went all the way down to 48.21. That was on Thursday. Don't know. I don't think you got. Did you get a red dog reversal in that on Thursday? Because you had a 48 and a quarter low. You went to 48.21 early. You would have been really quick to catch that one because it only made the low by 4 cents. Had the big rally.
No.
No. What do you think?
No, I didn't get it that way. I am long Shaq from Friday. I actually was one of the guys that got to borrow when it was at 91, and shorted it. We also wrote it when it had that positive trend above the 21 day. At this point, it is somewhat of a broken name, but it's been so battered and bruised that I just felt like I saw a nice wide range igniting bar. Risk reward down here, I figured it was decent for some kind of oversold bounce. I feel like resistance is like 57.50 to 58. So for a trade, I'm in there. If it happens to take out 55 today, maybe it's an ad or 54.50, and all the moving averages curl down. So I would think with the little excitement out there and growth and the way the stock's been cut in half, and I wasn't caught in it, I figured I'd buy a little bit and try and play some kind of oversold bounce. But again, it's a broken name, it needs to prove itself, and I don't think that, would I love to see 57, 58, I think that's doable, but I don't foresee it, becoming the way it was, 6 to 7 months ago.
Okay, we had Sean Udall on a little bit earlier here. It's 9:14. We got time for one more stock here, and he's looking maybe for a little surprise eye to IBM here. It's had a nice run up. Stock's gone nowhere for quite some time. Could you give us your thoughts on IBM?
My thesis in 2013 and 14 was to stay away. I thought it was dead money, which, thank goodness, I guess I was right on a few things. From here, I think the risk reward is in your favor. I would maybe buy the 175 calls. It's at 170, 251. Maybe do a 175, 178 call spread if you want to get some exposure to IBM. People I think are looking some places to put money. You have the buyback, the dividend, you have Buffett, you have maybe a pleasant surprise because I feel like the last few times it's got beaten up. So, if you're not committed to it, I'd be careful. Again, I don't like to be long stocks into earnings because of the report risk, but if I had to do either a call spread or a put spread, I'd be buying a call spread in IBM.
We've been on the line with Scott Redler. He's Chief Strategist at T3 Live and T3 Trading Group. He joins us every Monday at 9 o'clock to give us his take on the market. Scott, thanks a lot. We'll talk to you again next week.
Sounds great. Thanks for having me.